Good morning, everyone. We are going to go ahead and get started. There's quite a few folks that are still logging in to this morning's webinar. I want to thank you for joining us for today's presentation on AIVRS project, fiscal management, and AIVRS grant setup. Next slide, please. I'd like to introduce this morning our guest presenter, Ms. Kim Lynn Lambert. Kim is an enrolled member of the Eastern Band of Cherokee Indians located in Cherokee, North Carolina. She has been the executive director of the Cherokee Tribal Vocational Rehabilitation Services Office since 2008, and also the executive director of Vocational Opportunities of Cherokee since 2005. Prior to that, she worked with the Eastern Band of Cherokee Indians for years, starting as the secretary of JTPA, working up to the executive director of the Education Training Division. Kim has earned an Associate of Arts degree in Business Administration, a BA in Business Administration, and an MA in Educational Administration. She has served on several committees and boards over the last 40 years, including the National Native American Employment and Training Commission for the U.S. Department of Labor, and on state boards and committees, including Independent Living, the Commission for the Blind, and the North Carolina State Rehab Commission. She has also served as an officer for CANAR. She has taught several workshops on tribal VR and job training. Kim also has 3 children, John, Jordan, and her youngest, Jessica, who just graduated with a doctorate in veterinary medicine. Congratulations. She also has 7 grandchildren. And in August of 2023, Kim will retire with 40 years of service to her tribe and her people. So thank you, Kim. Wow, what a resume and a bio. We can't thank you enough for joining us today.
I'm looking forward to it.
Absolutely. I just want to start real quick also and just say that if you're new to Zoom, you're joining us for the first time in Zoom today, please use the chat box on the bottom of your screen. If anyone will type in their name and their job title or the name of the project that you work with, anyone that might be joining you. Also, if you are able to introduce yourself or give us your tribe's greeting. Just want to also let you know that if you're joining by phone, you can use *6 to talk and *9 to raise your hand. And just some housekeeping, if someone is speaking and you want to chime in, you can just put your comments in the chat box at the bottom. The narrator will respond to the chat box comments and provide you the opportunity to talk. If you have any questions or comments, any recommendations, everything is welcome. We're here to present information, but also learn from each other. So we are very excited when folks chime in and comment. So everyone's experience is valued. We please ask you to share, but also allow times for others to share as well. Next slide, please. Today's learning outcomes will include, hold on just a second. Number 1, the increased awareness of best practices and strengthening internal controls and meeting the match cost share requirements. Number 2, increased knowledge of the Northwest Indian College's TVR Institute's financial management toolkit, which is what today's presentation is based upon. And number 3, increased understanding of grant management, including understanding the grant cycle, cost principles, and the OMB uniform guidance, which is the Office of Budget Management. Next slide, please.
There is a hand raised. I just wanted to put that in there. I noticed Robin has their hand raised.
I do not see it. Hi, Robin. you have a question?
Hi, sorry, it's me. My hand's not supposed to be raised.
Oh, my bad.
No problem. So we're going to start out with, we have a poll, and we're going to put up that first poll real quick. Ava's going to help us with that. And if you will, just answer these poll questions.
Should I be on the previous slide?
Yeah, that's fine.
All right, nobody's cheating.
Anyone else answering the poll questions? Can everyone see the poll questions? I can't see the poll anymore, Ava. Did it go away?
Nope, we have 8 of 9 people responded. I think now's a good time if we wanted to end it.
Okay, great.
All right, and did we want to share the results, or we'll wait till we go on to the
Yes,
next?
let's share the results and see what they look like.
Are you able to see this?
I am.
Okay.
So what is fiscal management? Yeah. You're absolutely right. Everyone answered it, all of the above. So let's go on to that slide. What is fiscal management? Kim, you want to start with this slide? Talk about
Sure.
what fiscal management is.
Okay, fiscal management is the process of planning, directing, and controlling financial resources and the management of responsibilities for expenditures. It's important to understand the many strings attached to these grants funds to ensure compliance with tribal fiscal rules and comply with federal recognition. Fiscal management is essential to the long-term success of the AIVRS programs.
When we are talking about fiscal management, what does that bring to mind? Anybody want to talk about it a little bit? Does it scare you? Do you say, oh my goodness? Who's on here right now, if you'll raise your hand, that feels like they have a pretty good grasp of fiscal management of their grant? Julie?
Yes, I'm here.
Hey there.
Hi, Jamie.
How are you doing today?
I'm good. How about you?
Doing well, thank you.
I'm hoping to learn more, but also share knowledge with others if needed.
Thank you, Julie. I appreciate that. So yeah, I mean, basically it's what it is, fiscal management. You're managing your finances and the fiscal nature of your grant. And that involves, a lot of strategic planning, keeping track of things, making sure that, the main thing is that you're making sure of the financial success, long-term success of your project. Next slide, please. So where do you address that fiscal management part of your budget and your grant? Initially, we say go to your abstract because that is going to give you more information about your goals and objectives, the proposed number of individuals you're going to serve, they're going to receive services. It's going to give you your budget periods and also talk about any type of thing that you will be providing as far as services, purchases, and things like that. So, Kim, what would you say is the most important aspect of addressing your budget in the grant as far as looking at it and deciding what you really need to pull out from that abstract?
Well, it all starts with your proposed number of individuals that you're going to think that you're going to serve and the number of people that you think that you're going to place. I think that, and then it also, you have to decide how many staff are going to work for you, what kind of expenditures you're going to have. A lot of times involving the finance office to help get that started if you're new to the whole granting process. If you've done it before, then you kind of know how to plug the numbers back in, but it's imperative that you have a pretty good idea of how many people you're going to serve and how many you're going to place, because the first year, just as an example, we put way too many and then we weren't able to meet that projection. So when we addressed that in our second 5-year proposal, we made sure that we put enough people in there, the number of people that we thought we could adequately serve and adequately place. So I think that's a huge part of it.
Absolutely.
Mhm.
Anyone have any comments about first getting started with your grant and realizing what it is that you are going to have to be spending your money on? What areas of concern need to be addressed initially? Julie, do you want to share with us some of your experience?
Sure. My biggest thing on this part would be, don't think that the higher numbers are going to be better. So if you think you can serve 185 people, you better hope you can serve that 185 people. They don't really want to see the big numbers. They want to see what you can actually achieve. So be honest when you're doing this. Don't try to think big, be honest. I don't know what else.
That's great advice, Julie. Thank you so much for sharing. Is anyone else on here that would like to share with us? Maybe Ramona, some of your experience when you were first starting out.
Some of my experiences, I was hired in the position. I didn't write the first grant. So I had to go off base to what our grant writer wrote. So it took a while, and then we had a huge carryover because I didn't start until later on in the year. So just knowing what can be spent and what can't be spent is really important.
Yes,
And
thank
numbers.
you. Thank you, Ramona. And that happens a lot. We see on our side of things, new directors come in, they didn't write the grant, they're not really familiar with what was in the grant and they're trying to figure it out. So that's great advice. I appreciate you sharing that with us. Anyone else? So Kim is going to address with us some key areas to consider, especially from your APR.
Okay. I'm just gonna be casual and talk about how we created our budget and how we came up with all this stuff. So I had previously had experience with doing grant budgeting before, so that was a huge plus for me. And so, and also just want to throw out there, attending the grant writing workshops that we used to have before was the key to getting me a grant, because we were able to take section by section and look at exactly what they were asking from the government perspective, and learning how to write to answer all the questions that they were asking. And that was a huge plus for us, because this was a totally different field that we were going into. So I wrote the grant like 3 times before I ever got it funded. So, if you write the grant and you don't get it the first time, then please, take the comments and rewrite what they want you to rewrite and resubmit, because the 3rd time I resubmitted, I was thinking I'm just not going to do it this year, because I've done it twice and it's a lot of work and it's hard and I have to get a lot of external letters and stuff like that. So at the last minute, I thought, it doesn't hurt anything for me to reapply. So I ran around and got all my stuff and sent it in. And I didn't really think that I had the best quality proposal the 3rd time as I did the 2nd time, but I got funded and we've been funded ever since. So I just want to throw that out there. If you get discouraged, if you haven't already got a grant, that, don't get discouraged, because it might take you a time or two. But once they see the quality of your proposal and the need in your area, then a lot of times I feel like they find the money to help you. So I just want to throw that out there. So on our budget, exactly how you want me to address this, Jamie?
Well, we were going to say, I think that you really have to consider these key areas, because this is what you're going to eventually be reporting on in your APR.
Mm-hmm.
And so you want to make sure that the budget is addressed through reporting on these specific areas here, so that you can explain sort of how your year went, what you spent your funds on, what the outcomes were from those expenditures, because really that's what I feel like. And, first of all, let me just say that we are not giving financial advice. We are just trying to help you with working with your fiscal side of grant management. So we're definitely not trying to interpret the CFR or anything like that. We're just trying to help you.
Right.
So let's make sure that we're clear about that. But on the fiscal side of things, I feel like RSA wants to see where their money is being spent, right? They want to see in your report what your expenditures were, what you spent your money on. Did you spend it on the money, or use it in the way that you proposed in your grant? And then what were the outcomes of those expenditures? So we feel like those are key areas. Yes, go ahead, Kim.
Yeah, I just want to interject that the report, the actual narrative is very important, because this allows you to address some of these things that it may not be a box that you fill in. So we always make sure that in the narrative, we make sure we have success stories and how, the whole process, we don't use names or anything, but we'll say mail or whatever. And then we'll say what they needed, what kind of services we provided, what the outcome was, and, that this person is successful, what we had to help them with, and we give at least 3 or 4 of those really solid success stories. And I think that goes a long way in the higher ups, being able to see that this grant has really affected people's lives and touched people's lives in our community. We have a lot of drug problems here, and so we find that those are the type of people that we're serving. And so I think it's really important to show that we are able to turn those people's lives around and get them back on track. So I think that's huge.
Absolutely. Anytime you can show those positive outcomes in your APR and show that you effectively spent your money, I think that's going to go a long ways in making sure that you continue doing this work. Next slide, please. Kim, do you want to go ahead and start with this slide and talk about match, indirect cost, and fund accounting?
Okay. Starting with match, the director and finance office can work together to determine how to document and verify the match, whether it's cash match or the value of in-kind or non-cash match for the program. This amount may differ from the proposal if the award amount is less than the amount requested. Guidance from 2 CFR 200.306 cost sharing and matching. You can reference that. The 10% match amount is calculated from the total project cost, including the match amount, not the amount of the federal grant alone. We have been very fortunate here that we are a gaming tribe. And so we went to tribal council and asked for a cash match, which they generously provided. So we have not had to get in-kind services for our match, but I know a lot of tribes have. And so just what I've heard other people talk about is they've been able to match with some non-federal funds that may be tribal funds that came from, a different area or whatever. And even maybe some outside agencies are able to help them with their cash match or even in-kind services that they can provide. You want to talk any more about that, Jamie?
No, that's good. That's
Okay.
exactly right. That's
Okay.
and I think
Okay.
most individuals on here today understand the concept of match and what
Right.
in-kind means versus cash match and all of that. Is there anyone that has a question about match and what that means? I think for the most part, everyone on
Okay.
here
I think so too.
has a good understanding. What about
Okay,
indirect costs?
Okay, moving on to indirect costs. Indirect or facilities administration costs are related to the use of the tribes or the tribal organization's facilities, offices, and administrative support that cannot be claimed as direct costs. Facilities costs are related to office and meeting space, utilities, operations, and maintenance. Administration costs are those such as the general manager's office, finance, human resources, and IT. Primarily, a lot of indirect costs in our tribe goes towards paying the finance office because the finance office keeps up with all of our records. They do our drawdowns, and they provide a lot of support for our offices, if we have to make sure our cuff accounts match and that kind of stuff. But I understand that a lot of tribes also are provided an office building, and that could include their utilities. It might include their housekeeping that, cleans their offices or whatever. So I think those are costs that we don't touch. We don't have any access to those funds because the tribe takes that money off the top of our budget. So does anybody else have any other way that they do that? I think that's the standard way. Fund accounting, the finance office likely uses a fund accounting system. Our system is called Munis. It used to be called GEMS, but it's a multi-million dollar accounting system that our tribe uses. Each department, program, or agency has its own account number, and each type of expenditure has its own code. In this context, the grant award is considered the fund, and the finance monitors and processes expenditures related to agency operations and services that are paid for the fund. This is how you would, in our tribe, we have limited access to what we call Munis, and we are able to go in there and process purchase orders. And they have layers of people that approve those expenditures, and, up to $50,000. And that would probably the chief would have to approve that. And we don't spend that. But anyway, so that's very important that whatever you you know, you have to make sure that all your numbers are exactly right, because once you code that number in to that system, it's going to automatically deduct those monies from that line item. And so if you get a report back and that's been deducted out of something that it's not right, then that needs to be corrected as soon as possible, because that'll limit the amount of funds that you have available for something if you've taken a big amount or even a small amount out of that wrong line item. So anyway, the accounting office and the finance office of your tribe are very important partners with you, because they have the access that that you basically need to keep up your cuff accounts or whatever. I know we have another slide that talks about at least doing that quarterly, but we do that on a monthly basis, because we're all human and we make errors, and it's easier for us to catch something within that month than it is to wait for 3 months. And also want to mention that at the end of the budget cycle, all of our expenditures for the month of September have to be recorded by September the 15th, because if they're not, then that could potentially create an issue of where it could flow over into October 1, which starts a whole new fiscal year. And also they give us a limit on how many days after October 1 we have to correct anything from September. So you want to make sure that you really follow what the guidance is that's coming out of your finance office or your accounting office on how they want that done, because like most finance offices, they adhere pretty strictly to their guidelines. And also they start their audit process, and so they want to make sure that their financial expenditures are accurate, so they don't have to have any problems going into their audit. So I would just say work really closely with your accounting. And our finance office is huge. There's 50 or 60 people work there, but we have one person assigned to us, and that is the person that we use. And we email a lot and can pick up the phone and call that person. So always make sure you identify or ask for someone to be assigned to your particular program, so you can establish your rapport. I've even sent flowers to that person before personally, because I value their help and their support, and they're a really powerful partner that you can have with your grant process.
Thank you so much, Kim, for sharing that. Yeah, I mean, we just can't say enough how important that relationship is with your finance department. I've heard horror stories from new projects or older projects that they felt like the finance office was the gatekeeper, and they pretty much were very controlling over their funds. But I feel like, just like Kim said, if you have that rapport with your finance office, with your whoever your individual is that is your contact person over there at Tribal Finance, just keeping that communication open, I think goes very far in being able to manage those funds and have someone. I mean, honestly, I feel like the finance department, really, they just want to give you good guidance and good finance practices and principles. So trying to keep, a good relationship with them, I don't know, it might be difficult for some, but you have to find a way to work with them. So thank you so much, Kim, for that advice. Does anyone have any comments or questions about working with your finance office?
So we work really, I work really well with our financial office, our financial team. But just a suggestion, what we did this past KNAR is we brought one of our accountants with us, and we also brought our HR manager with us. Whatever administrative staff that you have that you can bring, especially your accountants and your CFOs, bring them to these KNARs, because they'll learn a lot about what our program can do. But without them being able to go to these, they're stuck in their ways and they have to do it by the book. But if you bring them to these KNARs, it kind of opens their eyes and they understand more of what our program can do and what we can spend these funds on. So just a suggestion.
Mhm.
Absolutely. You know, that is a great suggestion, Julie, because I have seen some of these finance officers attend KNR. And, you know, at first, I think they were a little hesitant. But then once they got there and started meeting people, hearing some of the discussions and really getting a true picture of what we do in AIVRS, I think it goes a long ways in helping with that relationship with that office.
It does.
So this is just kind of a real government looking slide here, but I just wanted to say that, you know, when we are talking about these definitions of match and cost sharing, in kind, and all of that, that comes directly from the Office of Management and Budget, or what we refer to as the OMB. So anytime you see this 200 point whatever, that specifically comes from the OMB. So if you don't have a copy of that, it would be a very good idea to make sure that you have a copy on hand, because this is guidance from government on how to spend government funds. And so I just wanted to throw that in there real quick. But if you ever want to look up references about that, you can make sure, and sorry, I was looking in the chat. You can make sure and pull up that OMB document and look at, a lot of times I'll search through it if I'm looking for a specific reference to something. So we want to let you know that that is where these definitions come from. And we're going to have a poll before we show the next slide. So Ava, if you could go ahead and put that poll up for us. And the question is, what is financial tracking? We're going to give everyone a few minutes to answer that question, and then we'll look at the results.
I think
So-
everybody, yeah, pretty much voted.
All right. So for the most part, everyone agrees that financial tracking basically is all of the above for the most part. Let's go to the next slide. So when you're setting up your financial tracking, this is where it's very important to start keeping track of these funds. Once the budget is established, you want to make sure that you're looking at what you're spending your money on. You're kind of tracking these expenditures against individual line items, kind of like how you keep track of your bank account, right? You kind of want to know. I don't know anyone that just has a checkbook and writes checks and doesn't keep track of how much money they spent, what their balance was before they spent, and what their balance was after they spent. And so similar in that way in financial tracking. We have reports that are coming from your accounting department. This finance office reports usually will give you the information you need because you want to know at any given point during that fiscal year, what expenditures you had, what was related to that year's budget. If there's a drawdown, against the grant award, you need to get a report of that and make sure that you are keeping track of those balances, and reporting all of those funds that are encumbered. And does everyone, so I'm gonna just say, encumbered means that you are already pretty much dog-earing those funds. You may not have spent those funds yet, but you're anticipating the expenditure. I'm not sure if everyone has a tracking system that way, which you can go ahead and encumber, particularly if you're working on an IPE that has quite a bit of expenditures or large amounts of expenditures. You want to go ahead and get those funds encumbered through your purchase order system. And in this part here, I was hoping that Kim would talk a little bit more about utilizing CUF accounts and what that looks like.
Okay, a CUF account is like she said, it's likened to a check register, and it's where you have a system of having individual accounts for services that you would provide to an individual. And then as you do a purchase order, it either, and they cut a check, it deducts from each one of those accounts. My office has a pretty detailed CUF accounting system to where we make sure that every expenditure is recorded and that therefore it can be matched to whatever reports you get from the finance office. It provides running totals for every line item, so we know at any given time exactly how much funds have been expended and exactly how much funds are left to be expended out of every one of our line items. Let's see, what else was I going to say about that? It's very important to keep up with those, and we have like I said, with the finance office, and I want to just touch on drawdowns for just a second. Drawdowns are so extremely important, and even though 99% of the time they're completely out of the hands of the program staff, we generate the amount of drawdown, and we use a system where we're lucky enough to be able to have the money kind of advanced to us, and we spend, and then we do a drawdown of what we've already spent. So some people can do that and some people can't do that, but we're lucky enough to be able to do that. So we generate a report that to the finance office saying how much money we need to draw down to cover the expenditures that we've already made. And so we submit that to our finance office, and then we get an email saying when the drawdown has been done and when the drawdown has been put into the account, our bank account. And so that's how we keep up with our drawdowns. But you run into a lot of situations where the finance office, the person's on vacation or the person has changed jobs, and or they're just backed up with drawdowns. And so you have to monitor that sometimes when you do one and you haven't been notified within so many days that that's been done, because ultimately it seems like RSA approaches the programs to say, why are you not doing your drawdowns? Why do you have so much money left? And a lot of times I think it's out of the program department's hands, because you're relying on the finance office, because we don't have the capability to go into the system and draw our own money down. So it's imperative that you keep up with that, because if you don't, then it's almost like the program is being held responsible for really something that's kind of out of our hands. But we work really closely with finance, and they usually will let us know if something happens that they can't draw our money down for whatever period of time. I also want to make mention on drawdowns is that RSA expects when you draw, if you're not doing the reimbursement system, if you're drawing your money down that you need to go forward spending, there is a guidance that says that you have just a short amount of time to get those funds expended. And it's almost like they don't want you to keep that money in your account very long, because they definitely do not want you drawing interest on that money. Because, used to, we always said within 7 days that money needed to be expended and out of your account. But, that may not be realistic, because, there's always holidays and stuff that happens and things, and especially if you draw down $100,000, it's hard to spend that in 7 days. But just be very cautious and monitor how long you're keeping those funds, and not expending those, just so up front that they, if they think that you're keeping them too long, they will address that to you. So I just wanted to mention that.
Yes, thank you, Kim, so much. That's a wonderful explanation of what drawdown is, how to utilize cuff accounts. Is anyone on today that has a question about drawdowns? How do you utilize a cuff account? I think pretty much everyone on here, that's your system of managing funds. Is that correct? There may be individual programs that do things a little differently, but for the most part, that's kind of how we function. So basically what we're saying, oh, wait a minute, we have a comment. Robin, thank you. She says, yes, Kim, thanks for the info on drawdowns. Explains the email I received from my RSA officer. Yeah, they're on top of that. Thanks for that comment, Robin. But anyway, yes, utilizing reports from your accounting department, make sure that you go over those reports, compare it to your own cuff accounts, your own register of expenditures, because you want to make sure that the finance office information matches your information.
Yes.
And it's going to be very important. Anyone have any questions about cuff accounts or reporting? Okay, if not, we'll go to the next slide. Again, when we're talking about financial tracking or setting up your financial tracking, we want to talk a little bit about creating a system so that you can confidentially code things that are specific to your consumers or your IPE expenditures for particular cases. We no longer use Social Security numbers or any type of identifying numbers when we're tracking expenditures. So it's recommended that you have your own system or your own coding process for your caseload. That way it protects the identity of each of your consumers, especially when it comes to these expenditures. And whenever you're spending money for services in the IPE, the finance office is going to know what you're spending money on, but we really don't want anyone outside of the program knowing who we're spending money on and what those expenditures are for. Do you want to talk a little bit about that, Kim?
Yeah, I just want to mention that, I've when I worked for TDR Circle, I went several places, and it was, brought to my attention that the finance office was stopping certain payments being made on behalf of clients, because they knew who they were. Because if you live in a small town, they're going to know who every one of these people, and they're going to know if if you send something in there with somebody's name on it and it's for a car repair or anything like that, they're going to say, well, why does that person need car repair? Why are you paying for that? So that was the whole reasoning behind creating a system to code people's names, so that you can mitigate a lot of those circumstances of sending somebody's name through the finance office and the person knowing who that is and wanting to stop that, even though it was a proper expenditure, it was very allowed, and this was in the person's IPE. But sometimes the finance office doesn't understand that whole thing. Years ago, as a side note, we had a grant that required us to pay for people's post office boxes. And that was back before we had direct deposit. And so we sent purchase orders in to pay for these people's post office boxes. And the finance office said, absolutely not. That's a personal thing and people need to do that. But we explained to them that it was in the grant that we did that so we could assure that those people would get the checks that we were sending them. So that was just one example of the finance office not understanding what your requirements are. And so, it just mitigates a lot of factors, having a system, where you can generate a code and that just stops a lot of that. So yeah, that's important to do that.
Thank you, Kim. Yeah, absolutely. Anyone have any comments about that coding system? Do you have a different way of doing that, of tracking your expenditures?
So
If-
we have numbers for each of our participants. But a lot of times on the invoices, when they come in, it's got their actual name on there. So for accounting purposes, I'll black out the name and then I white out on top of the black because you could still see through that black, and then black out that white out. So that way they can't see the name whatsoever. So that helps too, if you can do that kind of thing.
Right.
Thank you, Julie. Absolutely. That's great advice for anyone that is looking for additional ways for confidentiality. And I think that's the most important thing. We're trying to be as confidential as possible, like Kim mentioned earlier, in our communities that are a lot of times are smaller communities. Everyone knows each other. You have in-laws and outlaws that know other people. And so thank you so much, Julie and Kim, for that. Real quick, we want to talk just a little bit about inventory management and what that means as far as items like frequently purchased items, tools, books, supplies, things like that, that individuals use for work or training. They may be reused. Once the case is closed, those items may be returned. A lot of times items are not returned, whatever way you work that inventory control in your program or in your grant. You just need to make sure you have a system in place for tracking, those items that were purchased and then loaned out to participants for their own personal use or during activities that are related to their employment goal or their actual IPE. So consider, making sure that you track things like tools, laptops, textbooks, any type of gear or supplies, things like that may be returned to your program. A lot of times personal items like work clothes and shoes and things like that, you may have a way of tracking expenditures, but you may not necessarily track those as far as inventory because those things are not going to be returned for the most part. So making sure that you have, an inventory agreement form so that your participants or your consumers are aware of what your policies are in regards to returning items or items that should not be returned. Next slide, please. Budgetary considerations. Also, we're going to talk a little bit about expenditures, as Kim mentioned earlier, the drawdown report from your finance office and reconciling that with your CUF account, making sure that you keep track of, everything that we call reportables, and making requests from your budget modification if necessary. Reconciling your financial report with the CUF account, as Kim just said, we're saying at least each quarter. But as Kim was saying earlier, they do theirs every month, which I feel like is a very good policy as far as keeping track of your expenditures. Some individuals, may not have as many expenditures in their program, so they feel like they can do it quarterly. But we were just saying at a very minimum, quarterly is recommended. But for the most part, I would say the monthly report, as Kim said, would probably be the best practice. Any comments about that, Kim?
No, other than just, yeah, whatever serves your office best. I mean, you may not have enough staff, or you may have a person that just does this, ever so often or whatever, but we have someone that's dedicated to doing this. And because, we have a lot of expenditures, and they may be small, they may be large. And we also have somebody monitor to make sure that the staff, the paychecks are correct, and all that kind of stuff. So whatever works for you. But like I said, monthly is easier to catch things when you have something that's gone wrong. So yeah.
Yeah, thanks, Kim. I appreciate that.
Mhm.
And then real quickly, we're going to start moving along a little bit quicker, because I just looked at the time and realized we've got a lot
Yeah.
of ways to go in a short period of time. Budget modifications,
Right.
if necessary, you're going to make sure that you are in contact with your project officer, because there has to be a justification. You also have to submit a budget modification documentation to your RSA project officer. So if there comes a time that you have to make a budget modification, make sure that you are in contact with your project officer, because these things have to be approved. Documentation has to be submitted, requests have to be made, and then justifications. We just wanted to touch on that real quick. Next slide, please. Oh, yeah. Sorry, Ava. I told you to go to the next slide, but we're going to do a poll. All right, and the poll is ended. And we talked about drawdown earlier, so I think everyone pretty much knows what
Yeah.
drawdown is, what it is not, and it is all of these things. Let's go ahead with this next slide. When we talk about strategic planning, we're talking about planning that involves reviewing your expenditures, looking at your next year's project costs, kind of doing what we call a budget projection. So you're kind of projecting what expenditures you're expecting to come up on the next year or the next fiscal year. So you want to make sure when you're developing your next year's budget that you're keeping in mind any of these budget projections. It's probably useful to use your current year or previous year's expenditures to get a good idea of how your money's going to go throughout the year, especially those fixed costs, those things that you're going to be spending money on regularly. So that is what we call strategic planning, so that you are projecting budgets and kind of have an idea and don't really have any big major surprises when it comes to your yearly budget. Excessive balances, we just want to briefly say that this information here comes directly from RSA. When you look at the financial toolkit from the TVR Institute, it also says there that this section is specifically directed by RSA. So there is a definition of excessive balance, and there are some guidelines as far as times of the year. So at the end of the second quarter of the grant year, March 31st, 100% of the year's grant funding is unspent. Also, if at the end of the third quarter of the grant year, which is June 30th, if 70% of the year's grant funding goes unspent, these are what we call excessive balances. So starting in April of each year, the RSA AIVRS team runs available balance reports, and they run that for all the grantees, everyone. So the report is reviewed by project officers for each grant. And so that's when you get notifications, about excessive balances. So we just want to talk about that briefly. and talk about, you know, if there's a problem, there's maybe some communication that you need to be in touch with your project officer, and make sure that you let them know what's going on with your grant funds. Next slide, please. Internal controls basically improve accountability. They help the project achieve performance and budget targets. They help you, you know, have some reliability to your financial reporting. And it also improves compliance. But most of all, and this I think is something that Kim specifically pointed out, was this prevents loss of public trust. So when you have good financial accounting practices and internal controls, for the most part, you're letting your community know, in the individuals in your public, you know, they trust you. They know that you're doing the right thing and that you are accountable. So these are just some internal controls that we wanted to bring to your attention. And we have another poll. Does everyone know what reasonable, allocable, and allowable costs are?
Yes.
Okay, we're split here on this. All right, so the results of the poll are a little less than 50-50. Let's go to the next slide. Kim is going to talk a little bit about, and again, when we when you see this 200 point, you know, this is information that comes from the Office of Budget Management, or the OMB. Kim, talk to us a little bit about what reasonable costs are.
Okay, a reasonable cost is it's in itself reasonable if its nature and amount does not exceed what would be incurred by a prudent person under circumstances prevailing at the time decision was made to incur the cost. So in other words, if you have somebody needs a car repair and the car repair is going to cost more than it would cost to purchase another car, that's not a reasonable cost. You know, if you have someone that needs a car repair and it's $1,500 and that's for tires and you know, whatever, and that's what you think you would spend on your own car and you think that's a reasonable, then that's an allowed cost. But if somebody quotes you $5,000 to replace tires and, you know, something else, and you think that's not reasonable, then you can't do that. So what we do is we get bids, and that takes kind of the ambiguousness out of it. If you go to 3 different places and you tell them exactly what you need, and then you take the lowest cost, and you know, so that assures us that that's a pretty reasonable cost if it's the lowest cost of the 3 bids. Because if you're going to 3, you know, pretty reputable places and they're giving you such a wild, you know, ups and downs, then you can pretty much go with the lowest one, and also make sure that, you know, if it's a car repair, that you get some kind of warranty. So that's how we determine something. If it's something that we think that we would pay out of our own pocket, and that our finance office says that that's fairly reasonable cost for what we're doing, you know, whether it be a service or whatever, that's how we judge that.
Thank you, Kim. Yes. So basically what we're saying is if you're trying to determine if this is a reasonable cost, you can ask yourself, is the cost recognized as a necessary for the performance of the grant?
Right.
Have the individuals incurring this cost acted with due process or due prudence?
Mhm.
So good sense choices, like Kim just said, if it costs more to repair the car than it does to go buy another car, then no, that's not reasonable.
Mhm. Mhm.
So anyway, that's the definition, the explanation of reasonable cost. Next slide, please. So the difference in reasonable and allocable is an allocable is treated consistently with other costs incurred for the same purposes. So if it's allocable, and if the goods or service can be directly assigned, and the benefit is provided, you want to make sure that you ask yourself this question: is it, incurred solely to advance the work under the award? Does it benefit the award and activities? Can it be distributed to all benefited activities or methods? And does the basis for allocating the cost represent a reasonable estimation of the direct benefit provided? So if a cost is to be allocated to more than one award, how is that cost allocated?
Mhm.
So that's a little bit different than reasonable. But I think the main thing they're saying here is consistency.
Mhm.
And let's go to the next slide.
Can you give an example of that? Just how you gave the example for reasonable, like specific that we would run into in VR?
You want me to do that?
Yeah, sure.
Okay. I think a lot of this goes like if you're working with state VR and you have some costs and who is going to pay for what service, then that would be how is the cost going to be allocated? How much are they going to be willing to pay for that service, and how much you're going to be willing to pay for that service? And so that just goes towards who's going to pay for what share. And that also can go if you have somebody say you have one of your participants is on WIA and they have money to pay for supportive services and you have money to pay for supportive services. Who's going to assume which one of those, who's going to pay for the clothes, who's going to pay for the tools? And so that's how we look at it being allocated to more than one award. So that's how we would determine who would share what costs and to what extent they would be willing to share those costs. Does that answer that, Jamie?
Absolutely.
Okay.
Does anyone else have any questions about reasonable versus allocable? If not, we're going to go on to the next slide, which is allowable costs. So that is a cost within award limitations that's consistent, documented, reasonable, and allocable. Gosh, I don't know why I have such a hard time saying that word. Allocable. I know
Yeah.
allocate is where that word comes from, but when we're talking about allowable costs, we're talking about sponsoring agencies. That basically, when you say allowable, that term means it's permitted as a cost within federal regulations or the terms of a specific ward or your institution or agency's indirect cost rate, things like that are allowable. Cost expressively unallowable or mutually agreed to be unallowable should be identified and excluded from any of your billing or your claims process or your application or any of those proposed expenditures related to your award. Any questions about what is allowable?
Well, what we discussed before was a lot of times it's easier to find out what's not allowable with this grant than it is what's allowable, because we don't have a sheet. It'd be nice if RSA would give us a piece of paper that said, this is what you can spend your money on, and this is what you don't spend your money on. But sometimes it's not that cut and dried. So you have to just make sure that when you go through the 200-4.403 that you make sure, because a lot of those things reference exact things like travel and and office supplies and what's called equipment and what's, you know, disposable. And so you have to make sure, and a lot of times too, you can also rely on what your tribe is it allows you to spend within those certain areas. And you have to kind of balance what your tribe does with what's allowed with RSA. So just be aware of that.
That's right.
Mhm.
Thank you, Kim.
Mhm.
Does anyone have any questions about allowable costs? I think you did a great job explaining that, Kim. Thank you.
Mhm.
Next slide, please. When we are talking about some of the really important things that we want to make sure to keep track of, and you want to make sure that you address these things initially when you're setting up your, you know, if you are just receiving a grant for the first time and your initial setup, you want to look at like your payment processes, how you pay for services. You want to have a written policy that kind of governs rates of payment for all of your purchased VR services. So you want to establish a fee schedule so that you're not all over the place, you know, paying this person a lot more than this person. And you're establishing these fee schedules to ensure that you are paying reasonable costs for each of the fees or services that you are purchasing. But you also, for this reason, want to make sure that, you know, the amount isn't so low that you really can't even provide the necessary service to anyone because you can't find anyone to do it for that cost. So you want to make sure it's reasonable. And then also you want to make sure that you're addressing the needs of the individual. So sometimes you may have some exceptions. You know, sometimes you have your policies for guidance, but sometimes there are situations when there are exceptions. So you want to make sure that you address that initially when you're setting up your grant. And we want to make sure that you do not put dollar limits on the amounts because sometimes in those specific categories, you know, you want to make sure that you are not setting it up so that you're not allowing the individual to be served properly because you have put limits. And we've addressed that before. We've had individuals contact us and say, hey, in our policy manuals, you know, they put a specific amount. So sometimes that's not good because you are limiting both yourself and also limiting the consumer that you're serving. Any
One
comments?
of the areas, yeah, one of the areas that is definitely true for us as far as transportation. We have a transit system, but it's not very reliable. So we can't say you have to ride that because it's the cheapest thing. Because if it's going to get you to work 15 minutes late and you're going to get rode up for that, then that's not reliable and that's not helping you. You know, we want to make you successful. So that, you know, we have just done all kinds of different things to get transportation for people. We've, you know, bought gas for their relatives to take them and, you know, just all kinds of different things. So you can't really say, like you say, put a limit on that because, you know, it's just different for every consumer because you might have some that works, you know, 10 miles away. You might have somebody works a mile away from their house. So that's always subjective. So we always try to do stuff like that on a case by case basis because, you know, you don't know. You can't just say, we're going to give you $10 and the $10 might run out in 2 days for somebody and it might last 4 days for somebody else. The other thing I want to talk about here is that we talked about a per consumer cost, and a lot of people say, how do you determine how much you're going to spend? Because you have to kind of have an internal amount on how much, because you know how much budget you get each year for how many consumers that you need to serve. So we take the amount of money that we get, you know, for our services to consumers, and we divide that by the total number of people that we say that we're going to serve, and that kind of gives us a baseline on how much, you know, we could spend on each person, and it's also more or less dependent on what is included in the IPE. So just as a ballpark figure, you know, we have serve X number of people, and I think we determined it was we could spend $4,666 on each person. And so one person may come in and only need $1,000 worth of services to be employable, but somebody else might need $5,000 because they might need to go back to school. They might need some kind of classes. They may need some kind of services. They may need a computer. So we kind of try to estimate, you know, how much it's going to cost for each person, just internally. And we're not putting a limit on them, but to us, we have to know sort of how much we're allowed to spend out of the budget, because your budget determines how much money you can spend for your total number of people. So I just wanted to throw that out there, as that's how we kind of determine that.
Thank you, Kim. I appreciate that. That kind of just goes back to when we were talking earlier about budget projections.
Mhm.
You know, if you have some parameters that you're working in, then sometimes there are exceptions, but then for the most part, you know what you're going to be expending out as far as your funds. Next slide, please. We're going to talk a little bit about the duration of services and establishing reasonable time periods for the provision of services that you provide. Kim, can you talk about this with us?
Let me think about that. Yeah, you want to make sure that you haven't, say your person needs some training, you want to make sure that you don't say you only can have 3 months of one class, and that's going to make you eligible for a job, because that might not meet the IPE, nor does it meet the amount of time that person needs training, because we all know everybody's on a different individual level of their skills and their, you know, experience and stuff. And so we may have somebody that sure needs a computer class, and then we can get them into a job, but we may have somebody that needs, you know, intensive training to get the job that they're going to be happy in. So we have reasonable timeframes, but sometimes those all have to be on a case-by-case basis too, to make sure that we're addressing what that person really needs. You know, we don't want to say, you know, you can only have one class, and then you should be able to get a job, because it just doesn't work like that.
That's right. And basically what you're saying is that, you know, but if you do place time limits, then it's going to end up constricting not only your consumer, but it's going to end up constricting you being effective with how you've spent your funds. So making sure that you don't, you know, put time. I mean, we want to be as efficient as possible in the provision of services, but we also want to be as effective as possible when we're providing those services as well. So thank you for that. Are there any questions about duration of services or time periods for the provision of services? If not, we're going to go on to the next slide. And I don't know why that says 4, it should say 3. Authorization of services, and just real quick, like, we wanted to say that you have to establish policies, especially when you're setting up your grant. So you want to talk about like the timeliness of getting authorization of your services, getting those things approved, especially if you're using an encumbrance system and you're encumbering funds. You want to make sure that you can get things authorized as quickly as possible so that you can go ahead and make the expenditures that you need to make. I think that's pretty self-explanatory. Unless anyone has any questions about that, we'll just go on to the next slide. So we're at the end of the presentation, and we just want to recap quickly what we went over today. We talked about establishing the initial project budget from your grant documents. So reviewing your GAN, if you have access to that, making sure that you look at your match, your indirect cost, setting up your fund accounting system, and also, if necessary, making any budget modifications and revisions if you did not receive the amount of funds in your grant award that you initially requested in the proposal. Also, we talked about setting up financial tracking, what kind of reports you need from your accounting department, how to utilize a cuff account and set up cuff account or a cuff accounting system so that you can track your expenditures and know in-house what you have spent your funds on. Also, creating a system to confidentially code your cases so that you're not using your participant's name, you're not using any identifying information, and you're able to confidentially track those funds or those expenditures. And also we talked about inventory management. We discussed budgetary considerations. So like reconciling your financial report. So the reports that you get from your tribal administration or tribal finance office, you want to make sure that that matches what you are keeping track of internally with your cuff account. If you do have a budget modification, it is imperative that you reach out to your project officer. Also strategic planning. So planning from the very beginning of your grant and throughout your grant, planning every year, doing budget projections so that you kind of have some parameters of what type of amounts that you're going to be working in each year with your budget. And then, of course, excessive balances. You always want to be in touch with your project officer at RSA in the case that you do have any excessive balances. That is pretty much what we covered today. Also, let's go to the next slide. I want to ask you all to please complete our survey. We're going to put that in the chat at the end. And I wanted to provide you some links here to the resources for today's presentation, the financial toolkit that is available at the TVR Institute's website. There's a link to that. And we want to encourage you to register for the course through the Institute so that you can actually learn as you go through this financial toolbook or toolkit exactly in more detail and in more depth. And then also the TVR handbook is located. There's a link there to the TVR Institute. Here is the end of the webinar survey. If you will please complete that. And I also want to mention while you're doing this survey real quick that we are having a AIVRS Academy online. July the 25th is the first day. Be looking for the announcement that comes out in our weekly announcements about that. We want to get folks registered. You can go to our Facebook page. There's a registration link there as well. But that AIVRS Academy is 4 days, half days. It's July 25th and 27th on a Tuesday and Thursday, and then again on August 1st and 3rd. And we will be going through the entire VR process for anyone that may be new to tribal VR. Also, if you want to brush up on some of your skills or any changes that have taken place recently, that would be a good way to have your staff involved in that Foundations to Tribal VR. And I think that is it.
I want to mention one thing.
Yes.
You know, I'm retiring in like 2 weeks. And so, but I will continue to have my same email because I'm still going to be involved with my organization, and I'm going to be on our board of directors. So anybody can feel free to reach out to me, and, I will call you or you can call me, and I'd love to have a discussion with anybody that has any additional questions. I've been a director for 15 years, and I've actually worked with the tribe and tribal VR 40 years now. So I want to drop my email. It's kimlambert@cherokeevoc.org. So feel free to reach out to me. I'm going to have a lot of time on my hands. And so I would love to talk to any of you off the record, on the record, or whatever. So I'm available for that.
Thank you so much for joining us today.